Hello and welcome. As we head into the weekend, the U.S. stock markets are closed. BTQ Technologies Corp., trading under the ticker BTQ on the NASDAQ, finished Friday's session, October 31, 2025, at $7.64. This was a gain of 3.95% on the day. In after-hours trading, it tacked on another 1.70%, or 13 cents, to land at $7.77. Now, many investors looking at that chart see a disruptive quantum technology company that just uplisted to the NASDAQ and is gaining momentum. That is the expectation. But the reality of this stock is far more complex and represents one of the most classic high-stakes tensions in the market today. The real story here is a battle between a company addressing a potential multi-trillion-dollar global security flaw and a balance sheet that, as of its last filing, showed quarterly revenues that are barely six figures. This is the definition of a high-risk, high-concept investment, and the recent trading action shows the market is just now trying to figure out what it is worth. The expectation is built on a powerful narrative. BTQ Technologies is not just another abstract software company. It is focused on a very specific and very frightening problem: the day quantum computers become powerful enough to break all of our current encryption. This is known as Q-Day. When that happens, everything from your bank account to government secrets to the entire Bitcoin network becomes vulnerable. BTQ's business is post-quantum cryptography, or PQC, which means creating new encryption methods that are secure against both classical and quantum computers. This narrative is compelling, and it has been supercharged by a string of massive news announcements. Just recently, on October 27th, the company announced a $15 million investment and development agreement with ICTK, a South Korean secure element chip manufacturer. This is a crucial move, taking their solutions from pure software to tangible, quantum-secure hardware. This followed an announcement on October 16th that BTQ had successfully demonstrated a quantum-safe Bitcoin, replacing Bitcoin's vulnerable signature algorithm with a new NIST standardized one. They're directly targeting the existential risk to the entire crypto economy. And of course, the most significant catalyst for the recent volume was the company's uplisting from the over-the-counter markets to the NASDAQ exchange on September 26th. This move opened it up to a whole new class of investors, funds, and algorithms, which is why we are seeing average daily volumes of over 8 million shares. But then we must turn to reality. The expectation is a company saving the world's data. The reality is a company that is, for all intents and purposes, a pre-revenue startup. In its last reported quarter, for the period ending June 30, 2025, BTQ reported total revenue of just $65,500 Canadian. That was actually a decrease of 27% from the same period last year. During that same quarter, it posted a net loss of $1.95 million Canadian. It has a negative PE ratio because it has no earnings. Its price-to-book ratio is a staggering 183. This is not a stock you value on fundamentals. It is a venture capital-style bet on a future promise. The company is burning through cash to fund its research, and while its cash position was strong at last report, nearly $6 million Canadian, up 900% thanks to financing, that cash burn is its lifeline. This extreme mismatch between a futuristic, world-changing story and a present-day balance sheet with minimal revenue is a perfect storm for volatility. This is also exactly the kind of setup that attracts short sellers. When a stock's price is built almost entirely on narrative rather than profit, many sophisticated traders will bet against it, assuming that gravity will eventually pull the valuation back to its fundamental reality. And we are seeing clear evidence of this in the data. As of the most recent public filing, on October 15th, BTQ had nearly 2.9 million shares held short. While the days-to-cover ratio is very low, at less than 1 day, meaning shorts can exit their positions quickly without causing a squeeze, other data points are more telling. The FINRA off-exchange short volume ratio has been extremely high. On October 28th, it was over 56%, and on the 27th, it was over 53%. This means that on those days, more than half of all the volume traded in dark pools was attributable to short sales. This is a significant sign of bearish pressure. Furthermore, the borrow fee rate, the interest rate that short sellers must pay to borrow the stock, has been very high. In late October, these rates were fluctuating between 16 and 21%. To put that in perspective, a typical easy-to-borrow stock might have a rate of less than 1%. A rate of 21% is expensive, and it signals that the demand to borrow and short BTQ shares is intense. There simply aren't enough shares available for all the traders who want to bet against BTQ. We also saw a very unusual spike in fails to deliver, or FTDs, at the end of September. On September 30th, FINRA data showed over 815,000 shares failed to be delivered, valued at over $5.1 million. Fails to deliver can happen for clerical reasons, but a spike of this magnitude in a newly uplisted high-volume stock is a red flag that many retail investors watch closely. It can sometimes indicate settlement system stress or potentially more aggressive shorting tactics where shares are not located properly. For investors, it is important to know how to track this. You do not have to guess. The official SEC fails to deliver data is published twice a month. You can also find daily short volume data from FINRA. When you see a stock with a compelling story, a high borrow fee, and a high short volume ratio, you are watching a battlefield. The shorts are betting the company will run out of cash or that its story will fail before it can generate real profit. The longs are betting that its technological breakthroughs and partnerships, like the one with ICTK, will prove the narrative true. What's your take on that FTD spike in September? Is it a sign of market mechanics failing, or just a symptom of a highly volatile new listing? So let's look closer at the company's business. The management team has credentials. The CEO, Olivier Roussy-Newton, previously founded Hive Blockchain Technologies, the first crypto mining company to go public. The board includes high-profile names from the German banking world. They are not novices. Their strategy appears to be two-pronged. First, software. They are developing PQC solutions that can be layered onto existing systems. Their demonstration of a quantum-safe Bitcoin core is a perfect example. It shows they have the expertise to tackle one of the most complex and valuable networks on Earth. Second, hardware. The $15 million ICTK deal is about building secure element chips. Think of these as tiny specialized processors that handle encryption, which could be embedded in everything from new cryptocurrency hardware wallets to Internet of Things devices and national defense systems. They are also collaborating with the University of Cambridge on quantum photonic devices, which is next-generation technology for quantum communication. This is where we must weigh the future outlook against the current risks. The primary risk is financial. With a net loss of around $2 million per quarter and a cash position of $6 million as of June 30th, the company's financial runway is not infinite. They will, without question, need to raise more capital, and likely within the next year. This could come from their new $15 million development agreement, but it could also mean issuing new shares, which would dilute existing shareholders. The next major catalyst will be the company's third-quarter earnings report, expected around mid-November. Investors will not be looking for massive profits, but they will desperately be looking for any sign of revenue growth. Did these new partnerships start to generate any income, or is the cash burn accelerating? The other major risk is competition. BTQ is not the only company that has identified this threat. Giants like Google, IBM, and Microsoft are all in this space, as are other pure-play startups like Arkit Quantum. BTQ's strategy seems to be focusing on niche, high-value applications like blockchain and secure chips, which may be a smart way to avoid direct competition with the giants. Even Wall Street analysts are completely divided, which perfectly captures the expectation versus reality dilemma. One firm has a strong buy rating with a $9.99 price target, implying significant upside. Yet another analyst consensus report, covering 5 analysts, shows an 80% buy rating but a mean price target of just $7.58, which is below the current closing price. This contradiction tells you everything you need to know. Nobody truly knows how to value this company. The discussions online reflect this. On one side, you have investors who see the NASDAQ uplisting and the quantum-safe Bitcoin news as the beginning of a major re-rating. They see a $7 stock that could be a $700 stock if it captures even a tiny fraction of the global cybersecurity market. On the other side, you have skeptics pointing to the negative PE, the minimal revenue, and the high short interest, warning that this is a hype-driven bubble that is about to correct hard, especially as the post-listing excitement fades. Based on this, comment below if you believe BTQ Technologies is a 10-year hold for the quantum security transition, or if it's a short-term trade on the NASDAQ